The market shows some weakness by breaking a support level and selling off a bit. Is it time for the bulls to take a break? This is Invest with Jacob. Okay, guys, so the market dropped about 1% today before trying to rally on the Fed minutes, then getting sold back down at the close and is pushing down a little more after hours. With the break of 42.80, this is a good start to the pullback. However, we do still have more support levels to break before we can be comfortable saying that the pullback is underway. I'll get into all that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the Nasdaq. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with a break of 42.80, it is a good start, but we have more support levels to break, so let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500, and I've zoomed out a little bit here because we've been concentrating on the top, and the next push is higher as the bulls have been in control. However, with the break of that upper support level at 42.80, I did want to zoom out and revisit our pullback targets and go over what we should expect here as this move takes place. So if we are in the pullback and they do break that 42.49 level, diagonals tend to sell very quickly off of their top. So you don't get the standard ABC as I have it labeled here. I do have that on the chart for now, but a lot of times you just get a direct selling down toward your target, your C wave target, without getting much of a bounce in B. So it's very common that you see like a down and then this little move up that we got today on the Fed minutes, and then the C wave is just a super extended long wave down toward the target. And considering diagonals usually sell off toward the origination, and the origination is down here around this 40.97 level, that makes a lot of sense that we could see straight selling down toward that level. Now, it is possible that they can take a standard ABC down. They don't have to sell off. That's not, the market doesn't have to do anything. But that is the most common thing we see when diagonals end. So being that this last leg here is a diagonal, we would see that ABC down for 4 if this is wave 3. And again, because wave 4s of diagonals tend to get into wave 1 territory, it is possible we can get as deep as 39.50 down here and just to get into this wave 1 territory and still be in wave 4. So just because we break through 40.97, which is the 382, which is a common wave 4 target, doesn't mean we're not in wave 4, especially in diagonals. It's one of the reasons diagonals are very tough to manage because they don't follow the rules. Everything looks the same. Both corrective patterns and impulsive patterns are 3 waves instead of 5 and 3. So it becomes very difficult to track exactly where we're at until we start to get some confirmation and break of key levels, which is why we've been saying until the support level breaks, the bulls are in control. So technically the bulls are still in control, but the break of 42.80 is a good start for the bears. The next level down that we've been talking about is 42.49, and then 42.03 gets us very comfortable if we break through that we are in the pullback. So a lot of work still to do for the bears, and the alternate path to the downside is that we blow through this wave A target here, which was around 41.85 or so, and we keep selling off down toward 40.35 or so to 40.26, which is the 50% retrace, which is a very common wave A target of like a B wave. So you look for A, B, and then C down towards this 38.67 level. So if this is wave A, that means it would have completed the diagonal, which it is a diagonal, okay? And then it would sell off to its origination point, which is down in this area, which we could see a very deep pullback here towards 38.67, or even a little bit deeper than that. So that will be the telling factor. If we break through 39.50 and just keep falling, then it's much more likely we're in this B wave. But if they can hold just around the top of this wave 1 and then push higher, then we can count it as wave 5 of the diagonal and have 5 up off of the low at that point. So again, diagonals are very tricky and very hard to trade, and you need to see key levels break before you're confident in which move is happening. Okay, so again, we're watching the 42.49 level next, and then 42.03 level down, and on the way up, we're looking at 43.46 and then that 43.50, 260 area. All right, over on the Nasdaq. Okay, again, very similar setup. Okay, we did break through that upper support at 13,497. We are down below that. And then the next level of support that's important to break is this 13,285 level. If they can break that, we should see a move down toward below 12,953 to get the pullback rolling. And again, we're working with diagonals on here as on the Nasdaq, so we can see a direct selling down toward our wave 4 target, which in this case is generally in the 12,870 to 12,601 range. However, since we are in a diagonal, we could see a deeper pullback as deep as this 12,300 range to get back into this wave 1 territory, and then a push higher from there. And again, we would expect rapid selling at least down toward this 13,000 level. And then if the selling slows down from there, it can be much more likely that we're in this wave 4 count as opposed to this bigger A, B, C that I have on here, which would blow through that 13,000 level all the way down towards 12,600 and could be even very direct selling down towards that 12,000 level at the 764. There's a lot of support down here for that as the origination area of the diagonal, which again is what we see when diagonals finish, is a rapid sell-off back toward their origination point. So two paths on here to the downside as well. That 12,600 to 12,870 is our upper area for wave 4, and then if they are going to push it lower down toward this wave 1, we'd be looking at the 12,300 area. To the upside, they did hit that 13,741 area. We would be looking for 13,800 plus to the upside if they do decide to push higher. Guys, if you like the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it will take you over to the website. Once you're there, check out our membership plans area. We have two incredible plans, and they both come with a 7-day free trial because I want you to get in there. I want you to make sure it's for you, become part of our trading team, and make sure you love it before you ever spend a penny. You can cancel at any time. In our first room, my Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, as well as all of your Elliott Wave questions answered. We trade the SPY and the QQQ, and we do swing trade, which means our trades can last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are looking for day trading as well as individual stocks, you want to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that just crushes the market. It's how he structures the trade to get you in very cheap and get you large multiples on your money, and it's a very unique style that you kind of have to see to understand, which is another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into a small account and trades it using mini ES futures and disciplined trading methods, showing you how to build a small account into a large retirement or savings account, averaging 3 to 4% gains per week. Guys, we would love to have you in our room so we can make some money together. All right, guys, key takeaways for today. We're looking for a continued move down and a break of 42.49 for the bears to get this pullback really underway. However, if they're unable to do that, the bulls can push this higher towards 43.46 all the way up to that 43.50 to 60 range. On the Nasdaq, looking for a break of that 13,285 area and then a move down from there. However, if the bears are unable to break that area, they can push it up towards that 13,800 to 13,850 area. Guys, that is the market update for today. I will talk to you tomorrow.